Today, we are diving into a development in the crypto world that is quietly reshaping the way financial markets operate. The tokenization of assets has moved from theory to tangible reality, and at the center of this shift is XRP, a digital asset often underestimated but increasingly pivotal in enabling faster, more efficient liquidity across borders. If you've been paying attention, you already know that the market is not just reacting to price movements. It is reacting to infrastructure, to innovation, and to the underlying technology that can connect traditional finance with the emerging digital economy. Understanding how XRP fits into this growing tokenization landscape is not just interesting, it's essential for anyone who wants to grasp the next phase of crypto adoption and market evolution. The concept of tokenization itself has existed for some time, but recent developments suggest we are entering a period where it is no longer just experimental. From real estate to commodities and even traditional equities, the ability to represent ownership digitally opens up unprecedented liquidity and efficiency. XRP, with its unique speed, low transaction cost, and focus on institutional integration, positions itself as more than just a digital currency. It becomes a bridge between conventional financial markets and this new tokenized future. Institutions are no longer just testing the waters. They are building systems that rely on digital tokens for settlement, cross-border payments, and even fractional ownership of large assets. This is a shift with implications that ripple far beyond the price chart. What makes XRP particularly relevant in this moment is its network design. Unlike many other cryptocurrencies that struggle with throughput and scalability, XRP Ledger can handle thousands of transactions per second with predictable confirmation times. For tokenization to be truly effective on a global scale, speed and reliability are non-negotiable. Imagine a scenario where a high-value real estate asset is tokenized and fractionalized for investors worldwide. The ability to instantly transfer ownership stakes or settle trades without waiting days or even hours creates a completely different market dynamic. It's not just about making crypto transactions faster. It's about unlocking a level of market efficiency that was previously impossible. At the same time, regulatory clarity is starting to align with these technological possibilities. While XRP has had its share of regulatory scrutiny, the conversations around compliant digital asset frameworks, tokenized securities, and digital payment infrastructures are increasingly accommodating assets like XRP that are designed for interoperability with existing financial systems. This is crucial because adoption at scale cannot happen in a vacuum. It requires an ecosystem where traditional banks, exchanges, and corporate treasuries feel comfortable participating. XRP's integration into tokenized workflows signals a broader trend. Digital assets are moving from niche markets into mainstream financial operations, and this could redefine liquidity, settlement speed, and access to global markets. This part of the story, the intersection of tokenization, market efficiency, and XRP's capabilities, is just the beginning. Over the next sections, we will explore the specific ways tokenized assets are entering the markets, how XRP is facilitating these shifts, and what the broader implications could be for traders, institutions, and everyday investors. We'll examine real-world examples, emerging use cases, and potential market scenarios, all grounded in observable trends rather than speculation. By the end, the goal is for you to have a clear understanding of not only what is happening, but why it matters and how XRP is positioned in this evolving landscape. Now, as we move deeper into the discussion, it's important to look at concrete examples of tokenization in action and the role XRP is playing in making these transformations real. One area seeing rapid growth is tokenized securities. Companies are increasingly issuing digital representations of stocks or bonds on blockchain platforms, enabling fractional ownership that opens participation to a much wider investor base. This isn't theoretical. Platforms are already allowing investors to hold tiny fractions of traditionally high-barrier assets, from luxury real estate to fine art. XRP's network, with its low transaction fees and instant settlement times, becomes an ideal conduit for these tokenized assets, particularly when speed and cross-border capability matter. Unlike traditional markets where settlement can take days, XRP-enabled transfers can be near instantaneous, reducing counterparty risk and improving liquidity. Another compelling example comes from cross-border corporate transactions. Global trade often involves multiple intermediaries, from correspondent banks to clearinghouses, each introducing delays and costs. Tokenization of invoices, receivables, or even commodities allows these assets to move more freely, but to achieve scale, the underlying network must be fast and reliable. XRP is increasingly being adopted in these workflows because it can act as both a bridge currency and a settlement layer, providing certainty and efficiency. Corporations can tokenize assets on their balance sheets and use XRP to settle transactions instantly, avoiding the friction that has historically slowed global trade finance. The implications for markets are profound. Faster settlement means improved capital efficiency, reduced need for large cash reserves, and the ability to free up liquidity for new investments. We're also seeing tokenization driving the creation of new market products that were previously impractical. For instance, fractionalized real estate or tokenized commodities can now be packaged into derivatives or investment funds accessible to a global audience. These tokenized products aren't just convenient, they fundamentally change the dynamics of supply and demand. XRP's infrastructure ensures these transactions are settled quickly, transparently, and securely, reducing systemic risk and increasing trust among participants. The combination of tokenization and XRP's capabilities is starting to blur the line between traditional and digital finance, allowing investors to interact with assets in ways that were once impossible. It's worth pausing to consider the macro impact. As more assets become tokenized, liquidity fragmentation across markets is reduced. Investors no longer need to wait for the right market or endure high entry barriers. Assets can move more freely, and prices may become more reflective of real-time supply and demand rather than delays caused by settlement inefficiencies. XRP's role here is not speculative, it's operational. Its ledger enables this frictionless movement at scale, supporting a financial ecosystem that is faster, more inclusive, and increasingly global. This positions XRP not just as a cryptocurrency, but as a foundational infrastructure component in the tokenized economy. As we move into understanding XRP's adoption more closely, it becomes clear that the tokenization trend is directly influencing how institutions view and use the network. Traditional financial players are no longer dismissing digital assets as experimental. They are actively exploring how XRP can facilitate real-time settlement, cross-border liquidity, and integration with tokenized assets. Banks, payment providers, and fintech platforms are increasingly piloting XRP-based solutions, often as part of a broader strategy to modernize their infrastructure and remain competitive in a fast-evolving market. The attraction is straightforward. XRP reduces operational friction, lowers costs, and allows for faster transactions, which is essential when tokenized assets are involved. One of the most telling indicators of adoption is the rise of partnerships and pilot programs, where XRP is being used as a settlement layer for tokenized financial instruments. Corporations are experimenting with XRP to move tokenized invoices or securities efficiently between different jurisdictions. These trials are not only validating the technology, but also building confidence among regulators and market participants. When a digital asset like XRP demonstrates the ability to settle complex tokenized transactions reliably, it bridges the credibility gap that has historically slowed institutional adoption. This, in turn, encourages more issuers and investors to participate in tokenized markets, creating a feedback loop that accelerates growth and liquidity. Furthermore, the integration of XRP into tokenization platforms is influencing investor behavior. Investors are beginning to recognize that the efficiency, transparency, and speed provided by XRP-enabled settlements can create more predictable and accessible market conditions. Token holders can move their assets quickly, participate in fractional ownership opportunities, and gain exposure to markets that were previously difficult or costly to access. This democratization of asset ownership facilitated by XRP is reshaping traditional investment strategies and introducing a new level of flexibility for both retail and institutional participants. It's also important to note the strategic positioning of XRP within the broader crypto ecosystem. While many digital assets focus solely on speculative trading or decentralized finance experiments, XRP's emphasis on real-world settlement and tokenization infrastructure makes it uniquely relevant for bridging digital and traditional finance. As tokenization scales, the network effect grows. More assets on the ledger encourage more participants, which increases liquidity, which in turn attracts more issuers. This cycle positions XRP not just as a tool for digital payments, but as a backbone for tokenized markets that are becoming increasingly integrated with the conventional financial system. Looking ahead, the combination of tokenization and XRP's infrastructure is likely to have profound effects on market dynamics and liquidity. As more assets, ranging from equities and bonds to commodities and real estate, are tokenized, the frictionless settlement enabled by XRP could significantly accelerate capital movement across global markets. Faster settlement reduces counterparty risk, lowers the need for large cash buffers, and can improve overall market efficiency. In practical terms, this means that institutions can deploy capital more dynamically, investors can react more quickly to market signals, and new opportunities can be created that were previously constrained by slow or costly settlement systems. Another key implication is increased market transparency. Tokenized assets inherently carry detailed metadata about ownership, provenance, and transaction history. When these assets are settled on XRP's ledger, participants gain real-time visibility into market flows without compromising privacy or compliance standards. This level of transparency can improve pricing efficiency and reduce arbitrage disparities between markets, creating a more level playing field for investors globally. For traders and portfolio managers, this opens up new strategies for managing risk, optimizing capital, and identifying opportunities in tokenized markets that were previously hidden or difficult to access. It's also worth noting the potential long-term structural impact on traditional finance. As tokenization becomes more mainstream, the demand for efficient settlement layers like XRP could influence how banks and financial institutions structure their operations. Cross-border transactions, once encumbered by multiple intermediaries, could become faster and cheaper, allowing institutions to reallocate resources and innovate on new financial products. Over time, this could reduce reliance on legacy systems, streamline treasury operations, and even inspire regulatory frameworks that embrace digital assets as a legitimate component of global finance. From an investor perspective, these trends suggest that XRP's value proposition is increasingly tied to real-world utility rather than speculative momentum alone. The network's adoption in tokenized workflows, combined with its speed, reliability, and scalability, positions it as a core infrastructure asset in a rapidly digitizing market. While price movements are naturally volatile, understanding the underlying trends in tokenization and adoption provides context for why XRP could play a pivotal role in the evolving financial ecosystem. Observing partnerships, pilot programs, and integration milestones can offer insight into the broader trajectory of XRP and tokenized markets as they mature. Finally, as tokenization scales, we should expect innovation to accelerate in related areas such as decentralized finance, programmable assets, and cross-border corporate finance. XRP's ledger, designed for efficiency and compliance, offers a bridge between experimentation and real-world application. The combination of speed, liquidity, and regulatory-aligned architecture makes it uniquely suited for this era of tokenized finance, where every second saved in settlement can translate into tangible economic value. The next few years may well define how seamlessly traditional finance and tokenized assets coexist, and XRP is positioned at the center of that evolution. Ladies and gentlemen, as we draw this discussion to a close, it becomes clear that we are witnessing a transformation in financial markets that goes far beyond cryptocurrency speculation. Tokenization is no longer a theoretical concept. It is reshaping how assets are created, traded, and settled, and XRP is increasingly central to this evolution. Its speed, reliability, and ability to integrate with institutional systems provide a critical bridge between traditional finance and the emerging tokenized economy. This is not about hype or short-term price swings. It's about infrastructure, utility, and the real-world adoption that can fundamentally change market efficiency and accessibility. For investors, market participants, and anyone interested in the future of finance, understanding the role of XRP in tokenized markets is crucial. The combination of frictionless settlement, improved liquidity, and transparency offered by tokenized assets creates opportunities that were previously out of reach, while also driving innovation across traditional financial systems. The ripple effects, pun intended, extend from corporate treasury operations to individual investors gaining access to fractional ownership of high-value assets, making markets more inclusive, efficient, and dynamic. As tokenization continues to scale, watching XRP's adoption, partnerships, and integration into real-world financial workflows can provide insight into the broader trajectory of the digital economy. It's a reminder that in finance, the most important shifts often happen quietly beneath the surface, in infrastructure and systems, long before headlines appear about price movements. XRP's role in this emerging ecosystem highlights how technology, regulation, and market demand intersect to create meaningful, lasting change. If you found this analysis insightful, I encourage you to like the video, subscribe to the channel, and share your thoughts in the comments. Understanding these trends and engaging in discussion helps everyone stay informed in a rapidly evolving market. The future of tokenized finance is unfolding now, and XRP is at the heart of it. What you do with that knowledge can make all the difference in how you navigate these changes.